What is up, you guys? Welcome back to the channel, and in this video I'm going to give you a little known hack that's going to allow you to double your income as a woodworking or a handmade business owner this year. Let's dive in. All right, well, welcome back to the show. As always, I'm very grateful for your time and your attention. And in this video, I want to talk to you about a hack that a lot of people they kind of understand, but they don't really grasp in regards to doubling your income, or let's say at bare minimum, giving yourself a 20 or 30% raise from your woodworking or handmade business efforts. And so I want to talk to you today about margins. And so this sounds like a super businessy, lame term. But guys, understanding your margins and understanding how to manipulate or influence your margins can play a dramatic part in your take-home income at the end of the year. And so I'm going to give you a scenario real quick, and I just want you to kind of start wrapping your mind around this. I tried to make this as simple as I could, okay? So let's say that you run a $1 million a year business. You make exactly $1 million in revenue total for the business. Let's say that you run on 10% margins, which means that 10% is left over. What your margin is whatever is left over after your expenses, right? So let's say that your business runs on 10% margins, okay? So at the end of that year, you ran a $1 million a year business, you had $100,000 left over that you could pay yourself, or you could reinvest into your business with new marketing campaigns, new product lines, new building, whatever, right? 10% margins, you had $100,000 left over. Let's say that your material costs are 30%, which is kind of the metric that we try to hold to, and your labor costs, your shop labor costs are 20%. So 30 and 20, so you got 50% labor, or 50% combined material and labor cost in that $1 million. Now let's say that we start digging and we start finding better methods to do what we do. We start finding other vendors that we can get our raw materials from for less. We start ordering in bulk. We start finding ways to cut our costs. Well, let's say that we take our 30% material costs and we make that now 25%, okay? So we just had a 5% decrease in material costs, and then let's say that we take our labor from 20 and we make it 15. Okay, so we manipulate these just a little bit, 5% on each of these. So at the end of the year, you've only made a 5% difference here and a 5% difference here, but you have twice as much income in the bank at the end of the year because you went from 10% margins, the way that you were running it, to now you have 20% margins. So it's just incremental changes that double your income. Okay, now if you're running super high margins, let's say, for example, you're doing this, you're a one-man show, and you are running 50% margins. You could keep basically 50% of everything that you do. Okay, usually your margins get lower as you get bigger, but let's say that you are a one-man show, you're keeping 50% of everything that you do. Well, let's say that you can cut your material costs by 10%. Well, now instead of a 50% margin, you're running a 60% margin. So this is the whole idea and the concept of understanding margins. And so when we talk about understanding margins, again, this is going to be a shorter video, but I wanted to just give you some practical tools to understand this on a deeper level. So anything that you cut on the front end gets added to the back. Let's say that you can't figure out how to get cut 10% of your costs out. What if you could give yourself a 10% raise, right? You're doing the same exact amount of work, nothing is changing, but you give yourself a 10% raise. Well, in this same scenario, to where we're running a $1 million a year business, we're keeping $100,000. Every 1% that we cut somewhere in the way that we do things, we get more efficient. We start running a leaner, meaner operating machine. Every 1% that we cut is a 10% raise, because that 1% is how much money? It's $10,000, right? If you can cut 1%, if you're making $100,000 a year on a $1 million a year business and you can make a 1% change in your costs, you're now going to have $110,000 in the bank. If you can make a 2% change, you're going to have $120,000 in the bank. If you can make a 5% change, you're going to have $150,000 in the bank. So this matters dramatically. Also, guys, just FYI, this also really matters when it comes to the valuation of your business. And so the more margin that you have, the leaner that you operate on, the higher the multiplier is going to be for what you can expect to receive as an offer on your business if you ever do choose to sell it. So the thing I wanted to say about this too is that if you work a day job, most likely this coming year you're not going to get a 10% raise. Most raises at a day job are 2 to 3 to maybe 5% max. So the idea that you could fix one little thing inside your business and immediately give yourself a 10% raise is really, really awesome. So I just hope that you're wrapping your mind around this the same way and it's impacting you the same way that it impacted me. So just incremental changes on how you operate results in astronomically more money in the bank account at the end of the year. Okay, so how can you cut your costs by 1%? I'm going to give you 5 or 6 practical ways, and we're going to wrap this video up. So number one is material costs. When we look at ordering, how can we order and get discounts on our ordering? Can we order more in bulk? Can we order from other vendors? So one thing I like to do about every 6 months is I like to go back and I like to check our pricing, and I like to call multiple vendors and see if anybody else's has gotten better pricing, because this at the end of the day makes an astronomical difference in your bottom line. So if you can save 2 to 3 to 5% on your lumber costs, well, what happens? That 2 to 3 to 5% gets added to your margin at the end of the year, okay? Consumables. Again, this is like your biscuits or your glue or your sandpaper or your things like that you need, that you use to make your widget or your thing. So how do we cut costs on this? Well, again, we quit buying it from Home Depot or Lowe's. We find vendors that sell commercially. We set up commercial accounts. We start buying in bulk. So, it's like when you go to order business cards, for example. It's like, well, if you order 100 business cards, they're $1 a piece. But if you order 500 business cards, they're 25 cents a piece. Well, this is how we use economies of scale to really cut down our costs per item, okay? It's just that same type of concept in anything else that you do, okay? This is probably the single greatest thing I can tell you for a lot of you guys when it comes to having a dramatic jump in your margins. If you're not set up as an official business yet, I recommend doing that, and here's why. Because you no longer have to pay sales tax on your material. For example, you go buy $1,000 worth of materials, well, you're going to have to pay, depending upon whatever state you're in, what your state sales tax is. That's usually anywhere from 6 to 10%. Let's say it's 8%. Well, you're going to have to pay $80 in sales tax to buy that material, right? Well, once you're an official business, you don't actually have to pay that sales tax. You can fill out a form at Home Depot or Lowe's or wherever you're purchasing your materials from. Say, hey, I'm sales tax exempt. Now, disclaimer: I am not an accountant, and you need to make sure that your state governing authorities, that you go through this the right way. So, how do you become sales tax exempt? Is really what this looks like. How to become sales tax exempt. And so what happens essentially is you're just a pass-through entity for sales tax. So you didn't have to pay it to the place where you bought your materials, but your customer, your client, has to pay you the sales tax. But again, you're just a pass-through entity to where you're paying that sales tax to your state government, okay? So, but guys, this makes an astronomical difference when you look at, hey, all my material costs, I'm having to pay an additional 6 to 10% based on wherever you are. Well, if you could snap your fingers and that was gone and you didn't have to do that anymore, you'd make an astronomical difference in your pay at the end of the year, okay? 3 more and we'll wrap this up. Labor costs. How can we become more efficient? How can we squeeze more out of our systems? How can we get more out of every employee because our systems are set up that way? Next, marketing costs. How can we get leaner inside of our marketing system? How can we generate a higher ROI with spending less money on marketing? And then the last one, this is a very small one that a lot of people don't think about. This is something that I've realized as our business has gotten bigger, is credit card processing fees. So if you're using a processor like Stripe, Square, QuickBooks Online, however you're accepting payments, if you can move away from accepting payments that have fees attached to them, guys, I look back over this year. It's November right now. It's November 4th of 2022. I look back in our books. We've spent $10,000 this year in credit card processing fees. Now, when you have a $600,000 and $700,000 a year business, that's a very small part, but imagine if we didn't spend any of that money on credit card processing fees. Well, at the end of the year, I would have another $10,000 in my pocket or have $10,000 to invest in new equipment or something like that. So we're moving to trying to collect more deposits, cash, check, Venmo, Zelle, ACH bank transfers. So if you can do those things, then you don't have to incur those fees. Then on the other side of that is, let's say somebody just is they want to pay with their card. Well, then you just bump that 2 or 3% charge that the credit card processor is going to charge you. You tack that onto your customer's invoice, and so they're basically absorbing that cost, and you're not the one absorbing it anymore. Okay, so with that being said, guys, I wanted to keep this video relatively short. This is a little known hack to double your income this year as a woodworker or a handmade business owner. If you're knee deep in this and you're trying to grow your business and you're trying to get wisdom around that, I've got several resources for you. So you can go download my free ebook. I've got the link below. You can go join one of my free groups. I've got a handmade business group and a woodworking group, or you can apply to join the Woodworking Business Accelerator program. So guys, if you are building custom furniture, you're doing anywhere from $3,000 to $10,000 a month. You are relatively established, but you're ready to grow. Please apply, because we got a money-back guarantee on what we do, and I promise you that it's going to be well worth your time. So we've got tons of clients in the program right now that are getting incredible results, and I would love to serve you as well. So with that being said, hopefully this has been helpful to you. If you have not yet, make sure you subscribe to the channel. Leave me a comment. Let me know if this helped you, and I try to interact with everybody that I can that's leaving comments below. I'd love to hear about your business, where you're located, what you sell, and fill me in. I want to be connected to you. So with that being said, I'm going to wrap this up. I'll see you guys in the next video.